Lightning is great, right? Like I don't have to have a bank account. It's like it's instant. That's a great payment system. I really want to have $100 in my wallet, right? I don't want to have 500,000 sats because I basically cannot afford the volatility of Bitcoin. So how Stablesat works is we are basically hedging the volatility of Bitcoin, the price risk of Bitcoin using derivative exchange. If we take a long enough time frame, I think the real Stablesat is Bitcoin. Stablesat will be a revenue driver for Bitcoin Beach. Probably Latin America and Africa are the two places where we see most potential in the short term for our product and generally Lightning adoption. I will say that maybe today there is about 20% of the merchants across El Salvador start to adopt, are adopting Bitcoin, are using Bitcoin.
Nicolas Burtey is the CEO and co-founder of Galoy, an open source banking platform helping communities of any size adopt Bitcoin. In our conversation, Nicolas explained Galoy's latest product release called Stablesats. We discussed the future of stablecoins on Lightning. We discussed the future of Bitcoin banks. And we even got into the latest updates on El Salvador's Bitcoin adoption. I've asked Nicolas to send over his Fountain username. It's not quite set up yet, so in the meantime, I have directed his share of today's show splits to the Human Rights Foundation. If you enjoyed this show, the best way you can support it is by sending in sats over the Lightning Network. Use your favorite podcasting 2.0 app. You get to decide how much this show is worth to you. And I can't wait to see all the sats and comments you guys send in. Just a quick shout out. Today's show is sponsored by Voltage. Voltage is the industry standard and next generation provider for Lightning Network infrastructure. Today's show is also sponsored by Zebedee. That's Zebedee. And Zebedee is your portal into the world of Bitcoin gaming. We'll have more from Voltage and Zebedee later in the show.
All right, welcome Nicolas to the show. Thank you for joining me today. I've got a lot of questions for you about Galoy, about Bitcoin adoption in El Salvador, and the latest project you released, Stablesats. Can you start by sharing a bit about what Stablesats is and why it is important for Galoy's mission?
Sure. First, thanks for having me. So the idea behind Stablesats is to give the optionality for people who want to use Lightning to store their saving into dollar when they don't transact over the Lightning network. This really comes from the experience of having a wallet in El Salvador and talking with the people on the ground. The number one issue is that Lightning is awesome. Like everybody can transact about it. It's I can download the app on my phone and I can get plugged to the system. There is no I don't have to submit personal information document to start using the Bitcoin or Lightning network. Right, this is a very positive system. Lightning brings this instant settlement, low fee or even zero fee system on top of Bitcoin. But now, okay, let's say I'm a small business, or even I'm an individual in El Salvador, and typically I may not have extra saving, right? I'm living paycheck to paycheck, and so do I want to use Lightning, for on my case? And the issue is that my expenses are in dollar, and if I start receiving money over Lightning, and my money is stored in Bitcoin, if the price of Bitcoin drops, then I cannot pay my expense anymore, and this is an issue, right? The issue is that if you have an expense in one currency and your assets in another currency, you may not be able to pay your expenses, right, if the price change. And so the main idea behind Stablesats is to say, okay, can we work on something such that I can send to a Lightning invoice, right? If I want to pay my invoice online from Bitterfield, right, for my water bill or electricity bill, Lightning is great, right? Like I don't have to have a bank account. It's like it's instant. That's a great payment system. But I really want to have $100 in my wallet, right? I don't want to have 500,000 sats because I basically cannot afford the volatility of Bitcoin. And so this is the genesis around Stablesats. Maybe if you want, I can dive into the technical aspect of it. But this is really why we have been working on this project for almost a year, is to enable the use of Lightning, but also have USD or typically fiat equivalent, synthetic USD in your wallet when you don't use Lightning.
I see. So really trying to match, if my expenditures are going to be in US dollars, I need to have some level of US dollars to make sure I can meet my short-term obligations. Let's dive into the technicals and the specifics of how this version of a synthetic US dollar works. Can you explain how Stablesats works in the context of the other solutions that people might be aware of today?
So how Stablesat works is we are basically hedging the volatility of Bitcoin, the price risk of Bitcoin, using derivative exchange. And so the way to think about it is, if you have Bitcoin in your wallet, what we'll say in the trading space, you're long Bitcoin. What does it mean to be long Bitcoin? Is that if the price of Bitcoin goes up, you earn a profit in US dollar term. If the price of Bitcoin goes down, you have a loss in US dollar term. To compensate for this profit or this loss, if we go on a derivative exchange and we have a short position, we will have the opposite effect. So if I'm short Bitcoin, what does this mean? It means that if the price of Bitcoin goes up, I have a loss. But now if the price of Bitcoin goes down, I have a profit. And basically we create a synthetic USD by being long Bitcoin in the wallet, like physical Bitcoin if you want. And we also have a short Bitcoin on the exchange, so that the price of Bitcoin to USD can change in any direction. At the end, you still have the same amount of US dollar.
I see. So no matter what, you have your Bitcoin and you're basically just getting insurance on the price changing by having a short position.
Yes.
I see. Now, how does this differ from some of the algorithmic stable coins and some of the products that we've seen in the news in the last month or so, like Terra and things like that falling apart? And what are the breaking points at which a system like this could fall apart? What are those risks? What do they look like for you guys?
So I think Luna, the whole point of Luna is that it's an algorithmic stablecoin that doesn't have backing. It's not fully collateralized, right? So there is a point at which, if there is enough sellers, the peg breaks, and when the peg breaks, that's it can go to zero very quickly because there is nothing backing it, right? In the synthetic USD, the way we are constructing this financial product, it's fully collateralized, right? So the price of Bitcoin can be divided by 2, divided by 4. It will in every case be fully collateralized. So it's a very different way of making, I guess, a synthetic dollar. There might be some other product maybe you have in mind, like the Fuji money. Some people have asked about it today. This is also another way to make a dollar. With a product like Fuji money, it's over collateralized, right? Or on our side, we collateralize at 100%. We're not over collateralized. We're not under collateralized. We're 1-to-1. So for every dollar there is an equivalent in dollar in Bitcoin. With Fuji, the idea is that you said, okay, let me put twice as much Bitcoin into a wallet. And so let me put $2 worth of Bitcoin into a wallet. And for every $2, I can have $1 in a new USD token. And because I'm over collateralized, I don't need to use a derivative exchange, a short position. But the difference is that now if the price go down 50%, now I'm just at a position where I may get liquidated, and I need to put more collateral, right? So it's a very different system. The benefits of a Fuji money is you don't necessarily need to use a derivative, but you need to put twice as much as collateral, so maybe it's less efficient. So the risk is a bit different, but also putting twice collateral is, now you have more collateral at stake, so you have other risk you introduce also with this type of system. But yeah, it's a different risk reward trade-off, basically, or risk trade-off.
Right. Yeah, I get the impression that Fuji is very similar to what Maker has built on Ethereum, where you over-collateralize and you can create DAI. I want to understand more about the risks of using derivatives, though. What are those risks in your mind? Like, obviously, I believe there's a partner you're working with, OKX. What are the risks of obviously having funds in their custody? What are the risks of using these derivatives? And is there a point at which this system could fall apart?
Yeah. So the first thing to have in mind is that if you want to reduce risk, you should not try to peg your Bitcoin to dollar in any way, because when you start doing this, typically you will be in a situation where you have to, you don't have access to the key anymore. You are assuming some risk, right? The first way to think about it is like, let's think about, dollar in a bank account, is a way to have like fiat, right? Like the traditional way, right? And you may say, maybe it's the safest option to get, traditional dollar. And that may be right? But even in this scenario, you have a counterparty risk with the bank, because if the bank goes under, basically you may be out of luck, right? And you may argue, okay, maybe in the US, maybe in Europe, you have some insurance, and yes, you have some insurance, for some amount. But there is thing to keep in mind here, like it's typically only for, which country have those type of insurance. And if you think about, maybe money that you keep in banks, like let's think about Greece, 10 years ago, even the government might seize, those funds, right? So there is some counterparty risk as soon as you have fiat money, right? Is a way to think about it. You may think about, okay, maybe there is another way to have USD equivalent, is stablecoin, which is right. But stablecoin also have typically US dollar in a bank account, right? So this banking risk is also here, right? It's maybe not as obvious as someone that use stablecoin day to day, right? They can just have $100 and transact with it, right? And as long as it keep working, they don't think about the risk necessarily, but there is also significant risk with stablecoin, right? Even the ones that are fiat backed. And the risk that you assume is counterparty risk also is like, okay, I have my money in some account, in some banks. If this bank were to go under, this money can be at risk. In our case, probably the most significant risk is also a counterparty risk, is that, okay, we're using a derivative exchange and we have a position on this exchange. We have to put collateral on this exchange. And of course, if the exchange also is going under, you may be at a loss, right? And so this is the most significant risk in creating a synthetic contract, is you have to have your money in an exchange. There are other risks to think about. There are probably two other things that are relevant. When you work with derivative exchange, you have something called the auto-deleveraging event that may happen. The way it works is that sometimes you may be winning, you trade might be just, so in our case, it would be, okay, we have a short position, basically the price of Bitcoin go down. And if the price of Bitcoin goes down, we're short, it means on the derivative exchange, we're making profit. But sometimes the exchange may need to close position because people get liquidated. And in that case, it will be the trader getting long that may get liquidated. And if you're short, your position may get closed, even though it's in profit, just because the exchange try to match all those liquidation that need to happen. It need to close position basically, and your position may be closed. And this is a risk because the idea is that if the position is getting closed, then if the price continues to go down, you may not get fully hedged at this point, and you might have a loss in this scenario. So it's one of the other, I guess, risk you might want to assume is that you need to monitor for auto deleveraging event. That doesn't typically happen, but it may happen, especially when in a day where maybe Bitcoin will crash 50% or something like that.
Yeah. Now I want to think about the different approaches to stablecoins. You mentioned a bunch of them there, but I kind of group these into two approaches, and tell me if I'm wrong if there's any others, but I think of it as like an asset approach where you have something like Tether where there's an asset and it's often dollars in a bank account somewhere, and the stable coin is just a reflection of that. And then there's a contract approach, which is variations on either derivatives or over collateralized loans or some other structure. And I'm trying to understand, among the two, do you think both are going to coexist into the future? Do you think one is, I think you may be biased to think that the contract approach is superior, but I want to understand the trade-offs there of those two, and what you think the stable coin or Stablesats landscape looks like in a decade. Like, what are we going to have? A bunch of different variations of synthetic dollars? Are we all going to congregate towards contract approach or the asset approach? How does this all unfold?
If we take a long enough time frame, I think the real Stablesats is Bitcoin, right? In a world where we are hyper Bitcoinized, and the price of Bitcoin versus other fiat currency maybe have lower volatility as today, then this is the best asset that you can have, and it will it may become stable, right? But it's of course we're looking in a very, very long time frame. Now, if I think about what is the difference between at least in adoption between a stable coin where it's asset backed, right? It's dollar in a bank account or dollar in the US Treasury versus Stablesats or some other construct. I think it's a bit different. Maybe the Stablesats or Fujimone or some other system are maybe more resilient to some aspect to what can happen in, let's say next month, the US system say, we don't really like those stablecoin because maybe it's not helping the dollar, maybe they would come for a reason for why it's not good, for the US government. And in that scenario, maybe there will be a lot less, or the goal would be to reduce, the stablecoin backed by assets, and they have the power to do so because those assets are ultimately dollar in the bank account, and they will have the power to say the banks, you're regulated. If you want to keep your license, you need to stop banking those stablecoin. And so those stablecoins are very, I guess, dependent on government. So far, governments are US government is okay with it, right? But one of the ability of Stablesats or Fuji, for instance, is that you can use some derivative exchange, right? That doesn't have any banking access, right? It can be purely a Bitcoin exchange. Think about Collider as a good example, right? It's just use Bitcoin, it's Bitcoin only, even it can be Lightning only, and there is no dependency on the traditional fiat system. And so I think this is where like those new product shine, is that it can really live in a parallel environment that have no dependency on the legacy system.
Mm-hmm. Why are stablecoins on Lightning taking off so quickly now? Like, we've had Lightning for a few years. A lot of the tools to do these have been around for a little while. Do you think this is? And I think you had on your site you referred to a blog post from Arthur Hayes back in 2015 about making synthetic U.S. dollars with derivatives. Why are we now just discovering this and implementing this today? That blog post was 7 years ago now. What has led to the point where we can now accomplish this today, when we it didn't necessarily unfold the way Arthur had anticipated it would in 2015?
For me, the magic really comes when you combine Lightning and this synthetic USD. Because now you can really transact, for day-to-day payments, and you can. So basically, you combine the best payment system, right, which is instant settlement, low fee, and by the way, the instant settlement is critical if you want to hedge, because otherwise, if you send a payment on chain, but you have a finality that is, let's say 3 blocks. And you have to wait for 30 minutes or 1 hour, or and even this time is very variable, right? It really depends on when the next couple of blocks will get mined. It's hard to hedge quickly and accurately, because if the payment doesn't go through, when do you hedge? And the instant settlement of Lightning make it very straightforward to hedge. When you receive the money, it's when you you generate an invoice, and you have this pre-image, and you have the hash in the invoice, and when you release this pre-image, this is when you release the payment, when you have the Bitcoin, right? It's really an instant, or maybe sub-second payment system that allow you to effectively hedge, and it's a key part of this. But I believe it's also because Lightning now has matured to which you can build this on top of Lightning, right? The payment park the liquidity is getting there, and so it's possible to think about this and make this. And on our side, at Galoy, at least, it's something that we've been working on, for many months. I think this idea of having we talk to people in the ground, and they all say, yes, that's great, but I put $50 yesterday, and I have a month ago, and I have $40. I can't really use this, right? And the idea of having a stable value is here. Some of the reason why it took some time on our side, just we have time. It takes time to build this, right? It takes time to think about all the edge cases and test it, and this is why we've been doing a beta program for many months, and we make sure we are thinking about all the edge cases, what could go wrong, and we don't want to run this and make it $1 billion, and they say, okay, if something goes wrong, we don't care. We're taking a very cautious approach, which also means it takes time to develop the solution.
Got it. Okay, I want to get into, first, I want to make sure I understand the business model here with Stablesats. Is Galoy going to be earning money from this product? Is this a complementary product for users, or is it a revenue driver for the business?
Yeah, so maybe to answer this question here, first I can answer how Galoy make money, and then how Stablesats can help Galoy to make money. So we are developing software to help communities and banks and generally organizations to get on board with Bitcoin and Lightning. And our I mean, we want to be a software company. We don't want to be a custodian. We don't want to, own those assets, that customer use. The way to think about it in the traditional banking system is maybe the way FIS, Fiserv, Jack Henry operate with banks. And maybe you're not familiar with those companies. They are like both, all of them are traded on the NASDAQ or New York Stock Exchange. What they do is they develop software for banks. They don't operate the software. They just, if your local community banks, they are running a core software. Typically, they will not develop this themselves because it's something that is that takes a lot of time to develop. And so they will see one of those software companies and say, hey, we need a core banking system. We want to have a loan product. We want to have a checking product, maybe an international payment product. Like, they pick and choose, what they really want. And then those software company, typically they have already something on the shelf. They need to configure it, and they give it to the bank, right? The business model of the bank is then to, on top of the software, to operate the compliance and the marketing and the support. But one of the things that a bank typically will not do is like being a software company and develop, from scratch like a core banking system, because it takes years to do, and a significant, software team. And so the way we see ourselves with, the company we work with is similar, right? We are a software company and we develop products that are based on Bitcoin and Lightning, and then community use it, and we charge them for, developing the software for them and making support and developing new feature. And this is really the way to think about it. Okay, now how does Stablesats help us financially? So the idea is that a company like Bitcoin Beach now is running Stablesats. Stablesats will be a revenue driver for Bitcoin Beach wallet, the company, and because it will drive revenue for them, then we can obviously make revenue. Like, the more revenue they make, the more we can do web sharing or some other construct. But the idea is that the company we're working with, obviously need to make money, and Stablesats is one way to make money. Now we can enter into the detail about how we can make money on Stablesats. And there is basically two main ways. The first one is when you are long physical Bitcoin, short derivative Bitcoin, you are doing something that we also call the cash and carry trade. The cash and carry trade, historically earn yield about 6% per year, but the yield vary dramatically whether you're on a bull market or a bear market. But if you look over a long time period, you can get yield on the Bitcoin when you do this type of construct. And so this is one way how Bitcoin Beach wallet can make money. The other way is like you can also charge a spread when you buy and sell Bitcoin from USD. And so, the spread is something that can be configured. But the spread is another way of generating revenue. And this is the first main way of how Stablesats can help a community or a bank to generate revenue.
That makes a lot of sense. So you guys are providing the tools for the communities to operate their own banks, and your revenue comes from their success, kind of.
Yeah.
In some way or another, when they make money, you have the ability to then earn because they're succeeding.
And you mentioned community. I mean, the goal is, we are starting to work with neobanks, and also we're starting to talk with banks. Like, it's basically an organization that wants to be plugged to Bitcoin and Lightning, is a potential customer for us.
Right. Now, so on your site, it says that communities and institutions around the world are accelerating Bitcoin and Lightning adoption using Galoy, an open source banking platform. Can you highlight some of the communities and companies that are using Galoy today? I know Bitcoin Beach is the prominent example, but are there any others? Can you talk about some of the neobanks and banks that you're you're working with. I'd love to give people a better picture of like what the state of Galoy adoption is today among banks and communities around the world.
Yeah, so currently our customers are primarily in Latin America. So beyond Bitcoin Beach wallet, the second wallet that launched using our code base is Bitcoin Jungle in Costa Rica. There is a third project that is work in progress that should be released in a month or two called Guat in Panama. So it's a Bitcoin bank, like it's a neobank if you want, dedicated to Bitcoin in Panama. And you can go to guat.io, I believe. Yeah, they will be releasing their product in a month or two. There are other projects that are building on our stacks that are not public. It takes some months to develop your own wallet system. So, and it's also the interesting part, it's open source. So we know that some companies start building on top of our system, and like they don't necessarily need our help. They can do it themselves if they wanted to. But there are other projects in Latin America that are building on our stack that are not public. And yeah, there is also some, I guess, ongoing discussion in Africa, which is probably Latin America and Africa are the two places where we see most potential in the short term for our product and generally, Lightning adoption.
And are these? I know Bitcoin Beach was its own kind of thing that just spun up in El Salvador. It was not a bank before onboarding to Bitcoin. I want to understand: is the customer you're looking for, is this an existing financial institution, or is it like a community that could spawn into a financial institution over time? Because I think the idea of like communities and companies, those are very different things, right? Like the Bitcoin Beach community is very different from a neobank in America. So who's the target audience for you guys among those two?
I mean, that's a great question. If you think about them, they don't necessarily. They might need the same type of software in the background, right? Even though they will serve different customers and they will have different marketing, and both of them, they will want a core ledger where they can have for each customer, how much Bitcoin they have, how much Bitcoin they send and receive. Maybe the difference will be, a project in the US will have a fiat access, to a bank, and you will be able to buy and sell Bitcoin from your bank account. Maybe in El Salvador it might be a requirement also, like a need, but maybe less so because there is less people with bank accounts. There is a lot of ATM in El Salvador now, so you can also buy Bitcoin with cash. But overall, if you look at the requirement from those, at least our hypothesis is that our software can meet the need of both of them, right? And so there is, of course, some customization, you typically Stablesats assume that, we are creating like a synthetic dollar. If you're in the US, you might not want to use Stablesats. You might want to have like sats backed by dollar in a bank account. But similarly, you might still want to send and receive money from your dollar account over Lightning, like the Strike model, right, that you have in the US. But it's also something that we can build with our system. So there will be some differences in how you do the trading, but it's the type of thing that we want to enable. Mm-hmm. And maybe one of the main difference, but this is not necessarily on our side as a software company, is that a project in the US will have a lot more compliance requirement, a lot more. They will need to get licensing, and but us as a software company, like it's not necessarily our job to get the license and to meet with the regulator and things like that. Like this will be the project themselves who lead that basically.
I hope you're enjoying the show so far. I just want to give a quick shout out to our sponsor, Voltage. Voltage is the industry standard for Lightning Network infrastructure. Creating layer 2 applications and services on top of Bitcoin starts with Voltage, where you can spin up nodes, get access to liquidity, optimize your node, and much more. Voltage is leading the way as the next generation provider of Lightning Network infrastructure. And if you want to get a free trial and start using Voltage today, you can do so at voltage.cloud.
Now, I want to understand the role of a bank in the Bitcoin economy, right? Like if you're operating banking as a service with Galoy, I want to dive into like what is going to be different about the way banks are structured in a Bitcoin economy versus the fiat economy today.
Probably the main difference is in Bitcoin you have no one to backstop you, right, as a bank. In a traditional banking system, the traditional banking system is really fractional today, at least. What this means is that I think on average it's 4%, right? Like a bank may have 4% on hand, because 96%, they loan it out, right? Like there's a 25x leverage if we want. Like I get $100 in deposit from a customer, then I can loan $20,000, $25,000, and I'm assuming, if I have at some point an issue where there is a mismatch with my liability and my assets, the Fed will help me, hopefully, right? Like, and in a world where there is not as much fiat, or like it's really a Bitcoin world, hyper Bitcoinization world, like I don't think there will be as much lending, because expectation will be that bank will be a lot more collateralized. Does it mean that every Bitcoin bank will be 100% collateralized? I don't think so. I think many of them will be, right? And this will be a marketing argument, say that, hey, look, I'm a 100% reserve bank. And by the way, you don't have necessarily to trust me because I'm doing proof of reserve, and you can see that I'm, every month, I'm sure to my customer that I'm, fully backed, and this is my proof of reserve for the last year. But some people might still want to say, hey, let me give you Bitcoin, but I want you to generate some yield on this. I don't think necessarily this will disappear, but I think the main thing is that the first thing is, if we want to avoid what happened the last 3 months, we should have some matching in terms of duration. So we should say, okay, maybe I want to generate yield on what Bitcoin, but I should probably commit to my bank that I will not withdraw this for a year, right? So I'm giving you Bitcoin for a year. Maybe the bank should be responsible to find project where they could give this Bitcoin for a year. And after a year, the project should give back the Bitcoin. Of course, there is some risk here. And the bank can be a good intermediary to, by investing in many projects, hedge the risk, so that if one project failed in 50 projects, there is a limited loss. And the yield generated by the other project, are enough so that at the end, if you invest in a bank, like in a 1 year term, you will make money on your Bitcoin. But that said, I think we will not get there also before there is a lot more stability into the price of Bitcoin versus fiat currency, because today the major part, I believe, of companies, or I would say hedge funds, that really take a Bitcoin loan are the ones that want to short Bitcoin, right? It's like, okay, I get a loan and I'm shorting it, and if you want, like, you go bust, right? And today I don't think there's a lot of usage for I get a loan in Bitcoin to invest in something, because basically I don't want to pay back in Bitcoin, because the odds as if the price of Bitcoin tomorrow go 5x or next year go 5x, it would be very hard for me to reimburse this loan, right? So I don't think we're ready at all today to get a lot more to get those type of like Bitcoin banking product, that is relevant for like normal businesses. I think today the only organization that need those loans are really for hedge fund, right, that want to bet and typically have a short position. That said, there is another product that I think today makes a lot of sense, which is in the lending space with Bitcoin. Is okay, I give you my Bitcoin as a collateral, I get a fiat loan, right? Like, okay, I don't want to sell my Bitcoin. I'm speculating on the fact that the value of Bitcoin will increase in the future. Therefore, I'm like, let me give you, one Bitcoin, and I get a $10,000 loan in exchange that I don't need to sell my Bitcoin. Maybe I don't need to pay tax on it or something like that. And I think it's a very popular product today. I'm wondering if in 10 years, it will be as much as or 20 years, right? If it will be as significant. But yeah, this is my thought about Bitcoin banking.
So you think that maybe over time we get to a point where it's almost normal for Bitcoin banks to maybe be under collateralized, or to have a fractional reserve and lend out some portion of that at a time when Bitcoin's more stable and we have more clarity around like what customers might be able to generate in terms of yield?
So I believe there will be two types of Bitcoin banks. There will be the ones that will be fully collateralized, and there will be a lot of them, right? Like, and it will be really like, okay, I can be fully collateralized. If I'm fully collateralized, like as a bank, I need to charge you something, every month, or I don't know. I need to make money somehow, and so if you will go to a bank that is fully collateralized, the bank should make a living somehow, and typically, I think it would be okay. I will need to pay you to be my custodian, to safekeeping my Bitcoin. Of course, the alternative would be you do the self custody yourself, right? But there are reasons for why you want to use a bank. Maybe it's because you need.
It's almost like insurance. It's almost like you're going to have the option of like, would you like no insurance and the risk that maybe something blows up if it's under collateralized, or would you like to pay for insurance up front, have a premium, and you're paying, and you have a monthly expense, it's pretty small, but you're not going to blow up because you're covered because the bank's fully reserved, right?
And I mean the bank fully reserved doesn't mean something will never go bad, right? Like it can still get cracked, and like there's still risk, but of course there is a lot less risk if the bank is fully collateralized. They do proof of reserve, they have good security procedure. The risk will be extremely minimal, right? As minimal as it can be for a bank, right? But I believe there will be another type of bank that will be probably not fully collateralized, and they will do some fractional reserve. And then it's okay. Do you choose a bank that do 20%? They loan 20% of the Bitcoin, or 50%, 90%, 96% like today, right? And it's also okay. Pick the yield you want versus the risk, right? And if you look over the last 3 months, of course it was not smart to try to pick the highest yield, because they are the ones that will go under, right? In a crisis scenario. And the interesting thing, like also maybe with proof of reserve, right? If more banks had a proof of reserve, that you could go into the bank could tell you how much reserve they have. They could say, okay, maybe you can have an account with us. You don't have to pay any fees because we want only 10% of our reserve. We loan it to other party, so that like this covers the cost for us, so that you don't have to pay us every month some fees, right? Like maybe it's one way to think about it, right? And so it's like, okay, I have a free banking service with you. you are extremely savvy into how you finance, operation. And yeah, if you want to get more risky, then you could get some yield on your Bitcoin, but then the more yield you want to get, the more risk you may have to lose your Bitcoin, and so it's pick and choose your risk, right?
Yeah, and this is a really interesting question because we're in the Bitcoin space. We're given this option. We in a future where we have fully backed, full reserve banks, and we have fractional reserve banks. Right now, we kind of have that option today. We don't have anyone telling us what we have to do. Whereas when you look at like insurance in the fiat economy, like one example is like car insurance. You have to have car insurance to drive. You don't have that option. And I wonder what, if that regulation is stripped away, what do you think people will trend towards? Will people migrate towards this, fractional reserve system where, it looks free, I don't have to pay anything, but on the off chance something goes wrong, you may be locked out of your money, or you may lose it all? Or do you think people will migrate towards just naturally migrate towards a fully backed, full reserve system? Or do you think regulation comes in and says, hey, listen, this is an important thing. We need Bitcoin is now, 10 years from now, maybe Bitcoin's become such a core part of, the financial infrastructure around the world that maybe regulators do step up and say, hey, everyone's got to have some form of insurance here, if you're gonna go with a fractional reserve bank or something like that.
I mean, the first thing that comes to mind is I don't think insurance in Bitcoin banking in the world of like use Bitcoin as a primary currency around the world is worth anything, because you cannot, like, if a bank gets hacked, you don't have you will not call the CEO of Bitcoin and say, hey, we need to make this bank whole, right? So for me, the concept of insurance for Bitcoin bank, maybe today it exists, right? Because like it's you're talking about, okay, maybe let's have an insurance on a hot wallet, and there is $100 million in this hot wallet, let's think about the big exchange, right? This is what they may be claiming, that, hey, we're doing insurance on the hot wallet.
I'm actually thinking more insurance on the, maybe I used a bad example there, but I'm thinking like insurance in the fiat world being like car insurance, you have to have it to drive. And then maybe what happens if in the Bitcoin economy, the insurance is actually just that you have to pay a fee to the custodian so that they can survive. That's their business model, right? Like in order to support a business model, maybe there has to be some sort of fixed payment, because otherwise, like, how does the business doesn't survive, and it has to revert to a fractional reserve system, right? Like if the business isn't making any money anywhere, if it's sitting on that Bitcoin.
Yeah. I mean, that's a good question. It's interesting to see, for instance, how there is a difference between banking in Europe versus banking in the US. If you think about banking in Europe, it's very customary to be able to pay for your accounts. And the main reason is that regulation on like interchange is a lot more restrictive in Europe than it is in the United States. Like in Europe, a bank doesn't make much money on debit card. Like I think the interchange is capped at 30 basis points. Like it's very minimal. Like in the US, your credit card, interchange is like 3%, like 4%. Like it depends on the product you buy, the category of merchants. But it goes, 10 times what it would typically be in Europe, I believe. And therefore, like in Europe, because of regulation, banks have to charge you, like, hey, you have to charge you €5 a month, €10 a month. And it's because actually the regulation limits how bank can charge you on payment system. If you think about the United States, most of how banks make money today is like more fees that are not on a account fee every month, but it's more either hidden fees, which is okay. I'm using my credit card, and actually because I'm using my credit card, the merchant is paying my issuing bank, every time I do a transaction. I don't see that, right? Actually, I'm paying for it in the form of like the merchants have to increase his price because he's accepting credit cards. So there's like hidden price increase in the product I'm buying, but I'm not necessarily thinking about that. And it's an example where like actually the fact that the regulation maybe on retail banking account is more flexible maybe in the US to some extent. Like the US, make it that the bank account are mostly free. I don't have to pay a monthly fee to get an account. But there is fees somewhere, in the system still because the bank make money this way. I don't know if it's a good analogy or if it's a good way to think about it, but at least that's something I like to think about. Because we also sometimes talk to, like, depending of where we talk to some, potential prospect on our side that will be in the US or that will be in Europe. Like we clearly see that they have different way of thinking about how to charge customer, right? And in Europe, the idea of charging a monthly fee is something that is accepted as a practice. And in the US, it's not accepted as a practice, right? Like you have to charge customer in another way, right?
Yeah. And so like in Europe's example, you said like it's regulation that is forcing this fee because they've capped the amount you can earn on interchange. Do you think we're going to see some sort of regulation come into place in the Bitcoin economy to do something similar?
On custodian, on bank, it's a good question. I'm not sure. I mean, definitively, the more Bitcoin will grow, the more. And I don't know if that's a good thing necessarily, but I would expect regulation around this probably.
Yeah,
I think typically what we have seen, and that have nothing to do with Bitcoin, right? But what we have seen in the market over the last 3 months also will have an impact on regulation. But I think it's if you think about the Luna, like. I mean, it has nothing to do with Bitcoin, and it might negatively affect Bitcoin actually, because the regulator that may not understand the difference between those projects, that are, leverage long, let's gamble, let's see what happens, versus maybe the most cautious approach of the Bitcoin development. For the regulators, they might mix it together and just think, oh, it's the same thing. Let's add more barrier to it. I don't think that will be a good thing, But that might be more short term. Like if we think about much more longer term, how regulator will think about it in 5 or 10 years, that's a good question. I don't have a strong opinion.
Right. Okay, I want to talk about El Salvador. And Galoy has been on the ground in El Salvador basically since day one of Bitcoin usage there. What is your assessment of Bitcoin adoption across the country today and the different ways in which it's being used?
So I think there was a huge, spike around September, October last year for the main reason that the law was just passed in El Salvador, and also the government really wants people to use Bitcoin. And so the way they have been thinking about it is an airdrop, and everybody that will onboard the Chivo wallet will get $30 or $40. And so, of course, like suddenly you have like a couple of million people, they get $30. It's, $100 million, something along this line, that get injected into the system in the form of Bitcoin. So there is a lot of stimuli, right, to get Bitcoin adoption. Over the last 6 months, right, this like initial pump, I guess, have died off a little bit, and also maybe what a lot of first-time Bitcoiner, in El Salvador saw is that, okay, like the Bitcoin price have been dropping, quite a bit since last November, right, which was like 2 months after the Bitcoin law was enacted. was effective. And so we see right now that there is we have to really start about the education and really explain what Bitcoin is beneficial. And I will say that maybe today there is about 20% of the merchants across El Salvador start to adopt, are adopting Bitcoin, are using Bitcoin, which is, I guess, very encouraging to me. If you think, okay, it's not even a year, there is maybe 20%. Like, if in 4 years, we have 4 or 5 years, we have 100% of the merchants accepted Bitcoin, that would be awesome, right? I think that would be a huge success.
Now, is that 20% of merchants that are actively accepting Bitcoin on either a daily, weekly, or monthly basis? Or is it 20% that have the ability to accept Bitcoin but may not have accepted any?
I mean, I think all the merchants that have the ability to accept Bitcoin or have received Bitcoin, but it's possible that over the last week, over the last month, there has been less active transaction than if you think 6 months ago, right? Because 6 months ago was really the period where, there was a lot of, I guess, traction with the airdrop. But I think nowadays the merchants that have to accept it, they accept it for the right reason. It's because they start to understand Bitcoin, they understand the difference between Bitcoin and the US dollar. They don't really just accept it because, hey, I received $30, therefore I should open a wallet, right? And I think those merchants are, and people using Bitcoin today, like they really understand Bitcoin. This is why they use it, right? And what takes time is really the education. It's like we need to, each person, tell them, this is why you should use Bitcoin. This is the benefits of Bitcoin for you. This is the benefit of Bitcoin for the country. Even this is the benefit of Bitcoin. If everyone on earth was to use it, like, me as a person that has been in the industry for 5 years, like, it really took me, I don't know, 2 years something to really get Bitcoin, right? Initially, I was into crypto, and then I was distracted, and I had to learn about economics. And despite me having a computer science background, like it took me more than 2 years, right? And so if you think about the person in El Salvador that maybe doesn't have any economic background, any CS background, like it will take them time to understand Bitcoin, right? I think this is expected, but the education program are, I guess, very important, but they're working, right? They're slowly but surely, I think more and more people understand Bitcoin in El Salvador, and for me, this is a great success. What's happening on the ground?
What are the education
despite if despite if you will see the highlights that say, hey, I went to a shop and people don't accept Bitcoin, therefore like the Bitcoin law is a failure. Like I think for me it's a great success.
Yeah, there's a lot of that on Twitter. Just like, someone takes a picture of one thing, whether it's someone accepting Bitcoin or someone not accepting Bitcoin, and they conclude that, the entire country's on Bitcoin now, or no one's on Bitcoin. And, obviously the truth is somewhere in the middle. I want to learn more about what these education campaigns are in El Salvador today. What are you seeing the most success with in helping onboard new people to Bitcoin?
So there is many things happening in El Salvador about education. The governments have created some program. Me Premier Bitcoin is, for instance, an organization that is really focused on like helping people through meetups and other meetings, to understand what Bitcoin is. With the Bitcoin Betrayed, for instance, we have a earned section where you can answer something around 20, 21 question, and each time you answer a question, you get a couple of stats, to learn about it. This is something would like to expand to have a lot more questions. Like today in high school, I believe there start to be some program about Bitcoin, right? And typically it's also something that we've seen in Horizonte in Bitcoin Beach, is that it's one of the very effective to get a family to understand Bitcoin is you start with the younger one, right? You start with the kids, because for the kids, like transact with a wallet, like an app on the phone is very intuitive, and then they will teach their parents how to do it. And this is the most effective way to do. And so, yeah, I think if you have a program in school, and like every year you have like you have 10, 20 hours to learn about Bitcoin, like in 1, 2, 3 years, and most kids at school will understand Bitcoin, and the next year all the parents will understand Bitcoin. I mean it takes some years, but yeah, I think it's working. It takes time, but it's working.
Right. So it's going to be the youngest generation in El Salvador that is causing the rest of the country to get on board to Bitcoin. Is that how you think it'll happen? Like at first you teach the younger generation how it all works, and they spread this message to their family and friends, and it kind of proliferates upwards through the generations over time?
Yeah, I think that might be one way it might be working. At least in Ezonte, this is our experience. I mean, I think there might be other maybe government programs that eventually could be made that also drive adoption, maybe for businesses. Like if businesses can really start to understand how Lightning maybe helps them to drive fees, it's another also incentive to get more businesses to adopt Lightning. I mean, I think there's a lot of different initiatives, right? Like it will not be just from one particular program.
Right. So you have about 20% of merchants in El Salvador accepting Bitcoin. What's the state of like Bitcoin adoption in terms of saving? So not necessarily tied to merchants, but how many people are actually holding the asset and storing their wealth in it? Are merchants keeping the Bitcoin that they earn, or are they transferring to dollars?
It's a good question. I don't really know. I would think that today, if you can think about saving, you're in a great position. It means you can plan for the future. You have extra money around, right? Like it's in El Salvador, a lot of people don't have this luxury to be able to save necessarily for the long term. So I believe a lot of them have to spend the Bitcoin they receive, right, to pay for the day-to-day expenses, which is also why I think Stablesats is a very crucial feature. So I mean, I don't know how much people in El Salvador have a significant saving in Bitcoin. What I can say is when people in El Salvador start to use Bitcoin, they start to think about money, and they start to think about saving, right? It doesn't necessarily translate to they can save right away, but now they understand the concept, because if you live with cash, like the concept of saving is even not just a vocabulary, but just a concept is not something that you have in mind. When you discover Bitcoin, maybe you don't have the means yet to save, but at least you can start thinking about it, right? And you see people, their mind are shifting just about the idea about saving, which is just having the idea is extremely is great, right? To see this shift.
Yeah, absolutely. Now, what about the 80% of merchants that are not using Bitcoin today? Are there any themes or like common constraints that are holding them back?
I will say it's education. They don't necessarily see the benefits. Maybe they, tried it 6 months ago, and now they see like I've lost a lot of value in this. So why is this beneficial for me? But I mean, I would think the main reason is really the education. Because when you start to understand it, I think you want to use it more. Maybe there is a reason is that the Chivo wallet, that was launched in September. Now there is many iteration, new vendor working on it, but initially also the wallets had issues, like you were sending money, the money was like not necessarily arriving to the recipient, and you have to contact the support to understand where the transaction is stuck and things like that. And this has also created a bit of a step back, right? Because they don't necessarily understand that Chivo is not Bitcoin, and this is not because they had an issue with Chivo that Bitcoin doesn't work, but there's also, and it's also part of the education, right? Is the fact that they may have one first experience. I mean, if you ask randomly some person in El Salvador about Bitcoin, their first and only experience with Bitcoin was with Chivo, and maybe they had issue with it 6 months ago, at least if they tried 6-9 months ago. And also it's something to educate about, right? Like Bitcoin and Chivo are different, and you can use Bitcoin with any wallet. And the issue you may have had with Chivo was just because the wallet was new, and there was I guess bug to fix. But now also those bugs are being resolved, and so the wallet is working well. But you can also use a Bitcoin Beach wallet, right? Like you will. Bitcoin Beach wallet is working well, and you have also this like Stablesats feature in it. And but anyway, I think the main answer to your question of why those 80% may not be using Bitcoin is just an education question. It's just related to education.
Now, you hosted a conference last year in El Salvador adopting Bitcoin. You're doing it again this year. Can you talk to me about the impact that conference has had, and just bringing the Bitcoin community together to El Salvador to actually, see on the ground what's happening and how Bitcoin's being used?
Yeah, so the reason last year I said that we should really make a conference is the law was announced in June, I believe, and active in September. And I was spending my time in San Salvador during those months, and I had some meeting with banks, and one of the banks was saying, "Hey, yes, since we announced the law, we have many projects are coming to see us, and like there is this project called Whipple, and they are very interesting, and they want to work with banks, and I'm like, wait a minute, it's like." This is a Bitcoin law, right? Like, and so of course, Whipple, they want to be working with every bank, right? This is a value proposition, but Lightning makes Bitcoin obsolete, right? Lightning makes Whipple obsolete, sorry. And so the idea of the conference is to say, hey, we need to educate the local organization about what Bitcoin is, about what Lightning is, so that like they don't fall into this trap, like, I can work with crypto. No, I mean, you should work with Lightning. This is really why this law came to be. And so this is why we decided to make the adopting Bitcoin last year. And this year is the same idea, is like, continuous education, have people working on Lightning all around the world come to El Salvador, have those developer, entrepreneur meet the local community, the local organization, make sure like it's the integration continue, like it's we don't deviate on some other crypto project, and so it's really also part of the education. It's a key part of what we're doing to educate the local organizations.
Very cool. All right, I want to get into a segment I do at the end of every show called the lightning round. Some rapid fire questions. Are you ready for the lightning round?
I'm ready.
Welcome to the lightning round presented by Zebedee, your portal into the world of Bitcoin gaming. The Zebedee app offers a full-featured Lightning wallet seamlessly integrated with your own personal gamer tag so that you can earn Bitcoin on all of Zebedee's games on mobile and desktop. It's never been more fun to earn Bitcoin, and Zebedee is your key to it all. To claim your personal gamer tag and start earning some Bitcoin of your own, download the Zebedee app today.
All right. What percentage of El Salvador citizens hold Bitcoin today?
I guess 10 to 20%.
Interesting. what percentage of remittances will be done on Lightning in a decade from now? And globally.
For me, the remittance, the world will be obsolete in 10 years, 20 years. The reason remittance exists in the world is because there is friction to send payment internationally, right? If Lightning take off, remittance will be a word that we will no longer use.
Right. It's just a peer-to-peer payment at that point.
It's a payment, right? It's a Lightning payment, and whether I'm paying for a coffee at my coffee shop over Lightning or I'm sending money abroad, it's the same payment. And so I think remittance will have disappeared from the dictionary.
So is that to say that you believe in 10 years we're on a Bitcoin standard in a majority of countries around the world?
I think adoption can go fast, especially if you think about developing country, I think it can go fast. In 10 years, I don't know if it is in 10 years, but I think it will happen fast.
Fair enough.
Much faster than people anticipate.
Are there any books that have meaningfully changed your view of the world?
Many of them. I think The Sovereign Individual is one book that clicked for me, when I was into the Bitcoin rabbit hole at the beginning. So basically my transition from thinking about crypto to thinking about Bitcoin. The Sovereign Individual is one book I would recommend.
Interesting. If you had to put all your wealth into one asset and it couldn't be Bitcoin, and you had to hold it for 10 years, what asset would you choose?
That's a hard one. Probably an index S&P 500.
Okay, fair enough. All right, this was great. I really enjoyed this conversation. I'm excited for Stablesats and to see what you guys continue to develop. Again, congratulations on the $4 million raise for Galoy. And where can listeners go to learn more about you and your work?
Yeah, so if you want to learn more about Stablesats, we have created a dedicated website called stablesats.com. Galoy is galoy.io. Adoptingbitcoin.org for the conference. And on Twitter, I'm Nicolas Burtey, Burtey.
Awesome. Thanks for your time, and hope we can do it again soon.
Thanks, Kevin.
All right, in the last 7 days, you guys sent in 15,027 sats. That came in from 43 different supporters. Thank you to everyone sending in sats. It means a ton to me. Let's go through the top 5 supporters of the week. We have an anonymous user on Castamatic sent in 6,355 sats. Auburn Citadel sent in 1,936. An anonymous user sent in 1,689. StemR42 sent in 1,302. And Brian _ sent in 800 sats. Thank you to everyone. Let's go through some of the comments of the week. We have an anonymous user who says, "Love Albie," in response to episode 28 with Michael Booman and Moritz Kaminsky. Albie is onto something big. If you have not checked out that episode, definitely give it a listen. We have Inevitable, who says, "Wow, loved this episode. Do you envision users being incentivized to hold data for others in a swarm?" And this is in response to episode 59 on Hole Punch and talking about peer-to-peer applications. Honestly, I don't think I'm the right person for this answer. I don't know where this is all headed. My head's still spinning with possibilities. It's still very early, and to me, that's why I'm so excited about it. But I really don't have a grasp on exactly where the peer-to-peer app space is headed. But we do have Lightning payments to lean on where it makes sense. So if there ever comes a time where it does make sense to incentivize people to operate nodes or to host things or whatever the use case could be, we have a payment system now to do that. So I imagine we're going to see more of that regardless of whether it happens on hole punch, I think we're going to see more Lightning payments for things that have never been paid before, because we couldn't pay them before, because we didn't have the tool to enable seamless, instant, nearly free payments. We have Pops69 says, very interesting in response to episode 60 with Randy Narr. An anonymous user said, I like listening to you on episode 60, sent in a couple sats. Mr. Miyagi says, punching holes for sats on episode 59. DCW says, thanks for bringing projects around Bitcoin, bringing light to projects around Bitcoin, I think. Episode 60 as well with Randy Narr. And Othala says, every time I read or listen about Liquid, I end up being disappointed and less convinced that it is the right solution. I'm not so sure. I mean, you know, I think it's still very early for Liquid. I think it's early for everything. I think it would be nice to see some momentum building. I don't think there's a ton of momentum behind it right now, but Lightning went through a period of a couple of years where it also didn't have a whole lot of momentum on the consumer app side. Now we have a ton of momentum on Lightning. I think it's too early to count these projects out. We have to wait and see. I think we'll find out in a few years whether or not some emerging use case comes along and all of a sudden Liquid takes off. I think the coolest thing is that we have all these experiments running at the same time, and we can see what works best. Not every scaling solution is going to matter. Not every scaling solution is going to win, but the fact that we have so many operating at the same time and so many motivated teams building them, I think is incredible for Bitcoin. Thank you again for everyone who sent in sats and comments this week. Let me know what you think of this episode. Send in some sats if you enjoyed the show, and I can't wait to see you in a few days.